First of all, welcome everyone to this presentation on the Berlin markets, as well as one of our projects that I'll discuss towards the end. A little bit about the company that I represent. That's the Ten Brinker Group. They're one of the largest real estate developers in Germany. Now, they're not only based in Germany, but they build all across Europe, from the Netherlands, Spain, Portugal, and Greece. In terms of the size of the company, we do around 1 billion euro in turnover per annum. And the sectors that we focus on are very much diversified, but in recent years have leaned far more to the residential sector. So we've built everything from Burger Kings to Ferrari stores, Aldi supermarkets, you name it, will have done it at some point in the 120-year history. Now, the company that I run is a daughter company of the Ten Brinker Group. And essentially, Ten Brinker primarily builds projects for institutional investors. So these are large-scale projects, typically speaking, 30 million euro and upwards. They also build a lot for the German government. One quite unique thing to know about Ten Brinker is they do everything in-house. So they have their own construction team, they have their own architects, they do the development themselves, and they also have their own raw materials company, which means their name carries a lot of weight in Germany, and it's also why they get a lot of government contracts. Now, for projects that we find interesting that are on a smaller scale and not interesting for institutional investors, not because they're not a good investment, but rather because they're too small in terms of gross development value, that's where Volsung comes in. We take those developments that we think are attractive from an investment perspective and market those to individual investors worldwide. So people looking to buy 1 apartment, 2, 3 units. Essentially, we take clients throughout the entire process from acquisition. We ensure financing is possible. And on completion, we'll also arrange handover and tenancy of the final asset through our sister company that manages or that handles the lettings and management. So really an end-to-end process. We're there throughout to make sure that buyers aren't confused or stuck at any step of the way.
Hi Ian. Hi. Can you hear me now? Yes. Okay. Good. Sorry about that
No
technical hitch there. That's the first time we've ever had that using this platform, but thank you for getting the ball rolling.
Absolutely.
I'll just step in for just one moment because I did really want to give you an introduction,
sure.
To the audience, just so that people know really a bit more about Ian and his background. Ian and I used to work at a previous company where Ian was the German investment manager, spending a huge amount of time working with a myriad of developers in Germany. So got to know the country extremely well, and of course the developers, and is now working as a partner with one of their subsidiary businesses, specializing with Ten Brinker, as he's explained, arguably the most experienced developer in Germany, and I think something like over 115 years of operations, isn't it?
Yes, yeah, over 120 years now.
120 years. So I can't think of any other developer that I know of anywhere that's been in business for that long. So I mean, it really is an impeccable track record. Now, Ian is, well, I suppose spends a fair amount of time in a variety of countries, obviously Germany being one of them, Sweden, as far as I know, the UK, and you're dialing in from Hong Kong today, which is where you lived a significant amount of your, I think, adult life as well. But really, Ian brings an enormous wealth of experience of the German property market. If I am correct, Ian, and sorry if I'm going to embarrass myself or yourself here, you're half English and half Austrian, is that right?
That's correct, yeah.
That's right. And certainly for somebody who doesn't really speak German, when you hear him speak German, he speaks it with absolute clarity, like a local. And so I think this is also one of his strengths when he's going there and obviously building relationships. And one of the things that Ten Brinker, obviously were very much drawn towards. So we are very fortunate to have Ian sharing. And, for those of you who are not familiar with this property market, please do ask him, because he has such a depth of knowledge of this market that it would be a shame not to tap into those years of experience. So thank you, and please continue, Ian.
Thanks for the introduction, Richard. So just to rewind back, these are some of the projects that Ten Brinker have been involved in, just to give you an idea of the types of developments that they're building. At the top right, there's the GIZ campus for international development in Bonn. That was a 165 million euro government construction project. The top left is the Maximilian Center, also in Bonn. That was a mixed-use development that we sold to a pension fund for 112 million euro. And the bottom two developments are sort of the more standardized residential developments we build for owner-occupiers, but typically speaking for investors looking to invest in Germany. Now, today I'm going to speak a little bit on why specifically we're focused on Berlin as opposed to anywhere in Germany, or actually Ten Brinker build all over Europe. So we could be bringing you any real estate development products, so not necessarily in Berlin, not necessarily in Germany, but there is a very, very key reason why we're focused on this market. Now, it comes down to three things. If you're an international investor, there's really three things you need to look out for. Firstly, does the market have good fundamentals in terms of supply and demand? I think this pretty much gets broken down into the residential vacancy rate. And in Germany, in tier one cities, every tier one city has a residential vacancy rate below 1%. To put that in perspective, London, which is a very, very undersupplied market and absolutely good market to invest in as well, has a 2.7% vacancy rate. So when you have a residential vacancy rate as low as Berlin, it means that people are actually queuing up for apartments. When you see a yield of 4% or 4.5% or whatever it may be, in Berlin, you will have tenancy of the asset throughout. There's virtually no circumstance where that apartment will be vacant, as opposed to in some other markets, especially tier two cities, they might look like they have a high yield or sell on a high yield, like 5% or so. But in actual fact, your apartment may be vacant for some period of the year. So it's absolutely crucial to look at a residential vacancy rate whenever you're looking at investing in any market globally. So Berlin's is 0.8%. Now, in terms of the economy and what they focused on in Berlin has been primarily driven by the tech sector. That's how Berlin has diversified itself from the likes of Frankfurt, which still is the finance hub, Düsseldorf, München, where you have a lot of the multinational corporations based, and Hamburg up north is where you have your logistics. So Berlin really had to reinvent itself, and it's done that by focusing on this digital and tech sector, which has been incredibly profitable for the city and for the companies that have moved there. So it's home to Tesla, Amazon, Zalando, just to name a few. Now, the last thing on the fundamental side is the infrastructure. Now, Berlin, despite being the capital city of the fourth largest economy in the world, never actually had an international airport up until end of 2020. It did have an airport that served predominantly throughout Europe, but the runways were very small, so you couldn't fit some of the larger aircraft. As of the end of 2020, a rather auspicious time with COVID, the Berlin-Brandenburg International Airport has been completed. That flies now directly to 142 destinations worldwide, and they are continuing to expand. Of course, having opened during COVID was a little bit of a slower time for the travel industry, but that is now picking up once more. Now, going back a little bit to the vacancy rate and what that means. If you're buying a new build in Berlin, you will get 76 inquiries to rent that apartment. For one apartment, 76 inquiries per week. We rented out 150 units last year, and in how we advertise apartments, we will put an ad up online, and as soon as we get 30 inquiries, which usually takes about 30 minutes to an hour, we will take the ad down. Because the problem that we have is we get inundated with inquiries for rentals. We'll then do a viewing with 30 people, because if we left it on longer, we'll have 50, 60, 70 plus people showing up for a viewing each time. So it's a good problem to have in a way, and it's also the reason why we believe most in Berlin as opposed to any other tier one cities in Germany. Now, in terms of the capital growth figures, these figures are from 2022. The 2023 figures haven't quite come out yet, but we have consistently seen around 10% capital appreciation for the past 5, 6, 7 years now. The location where we have our latest project in Friedrichshain, it was close to 20%. Rental growth, we saw the highest rental growth figures in history in Berlin over 2022, 13.9% growth, and in Friedrichshain that was 15.2%. This all comes down to this chronic undersupply that we have in Berlin that, frankly speaking, is one of the lowest vacancy rates in the world. And that's why we're seeing these sorts of growth in a Western developed capital city. Now, whilst those were the figures from 2022, 2023 has brought a lot of changes in terms of the property market, in terms of the interest rate environment specifically, and many markets globally, and of course this is in the news quite frequently, have seen prices drop because, of course, if the interest rates go up, mortgage rates go up, the price of money gets more expensive, and some property markets have been hit. Now, it's been very, very interesting to see what's happening in Germany specifically. Markets that were not solid in terms of their fundamentals, markets that had higher vacancy rates, B, C, and D tier cities, have seen their prices drop over 2023, as you can see here. A tier cities, on the other hand, all of which in Germany have sub 1% vacancy rates, have continued to see prices go up. So what we're really seeing is a normalization of the market. You can't now buy anything anywhere, any property, and expect it to go up. You do need to look at fundamentals, and those cities that have strong fundamentals will continue to see growth, as we've seen here. So this is a report from Savills that just came out. Now, that wraps it up from the fundamental side of the thing. Now, there's two other very, very important aspects when you're considering investing abroad as an international property investor. That is financing and tax. Now, in terms of financing, what can you get access to? What are the interest rates? In Germany, we work very, very closely with a pension fund. They provide mortgages to pretty much all investors globally, unless you're living in a country or tax resident country that's on a watch list. They're the only countries that aren't possible to get a mortgage. The process itself is incredibly simple, and you can even check that you can get your mortgage and you can actually sign your mortgage before you even sign the property contract in Germany. Now, this pension fund lends up to 60% loan to value. You may get slightly more than that, but we prefer to work on the conservative side of around 60%. And interest rates at the moment are 3.98%, but that is fixed for 10 years. So you don't need to worry about interest rates fluctuating anytime within that 10-year period. On the tax side of things, I guess the biggest selling point about buying in Germany from a tax perspective is the fact that provided you hold that property for 10 years, you don't pay any capital gains tax when you sell the property. Now, that clock begins ticking once you sign the purchase contract. The property itself doesn't need to be completed yet, but provided you fail for that 10 years, there's no capital gains tax whatsoever. So you're actually able to exit the property without any costs, since the buyer takes on all the acquisition fees. So on selling, there's no costs. Now, with regards to the ongoing tax on rental income, again, you will not be paying any tax on your rental income. The reason for that is Germany allows a myriad of different tax deductions. Your mortgage interest is 100% tax deductible. You have 2% depreciation of the asset. Now, those two things alone will ensure that you won't be paying any tax on your rental income. Actually, in Germany, any and all costs associated with upkeep of the apartment are tax deductible. We had a client, interestingly, from Frankfurt that drove to Berlin, and he was even able to deduct the cost of his petrol. So that's how tax efficient buying in Germany really is. Now, in the event that you sell within 10 years, which we wouldn't recommend, if you did want to release equity, that's absolutely possible with refinancing after a few years. If you sell within that 10-year period, the taxes do get up to 40% fairly quickly, and you can see that tax band on the right there. So really the selling point here is to hold for 10 years or alternatively refinance the property after 4 or 5 years' time. Now, that summarizes why we're investing in Berlin, why we're building and bullish on the market and continue to be, despite interest rates having gone up slightly. I'm going to speak a little bit now on the latest development that we have that's located in Friedrichshain on a street called Goethestraße 31. Now, Friedrichshain is the most popular district in Berlin for expats. Actually, 30% of the district is made up of expats. So if you're, especially young professionals in the digital and tech sector that the city is attracting so many of, this is the district where they want to live. It's the most popular from sort of a trendy perspective, in terms of the bars, restaurants, cafes, work opportunities, offices. That's where everything really is based from the digital and tech side of things. Now, the development itself is made up of 75 units across 2 separate buildings. We have everything from studios to 2 beds. Whenever we design a building, however, we focus on what the renter demographic will be. So this project, we've leaned more towards studios to one beds, because you're going to be typically renting out to people living in the vicinity, working at Zalando or Amazon, MTV, young people in their 20s and 30s. Average price points are around €400,000, obviously dependent on the units, the floor, where it's facing. Gross yields of 4%, and completion is in December 2025. It's worth mentioning that we just started building the development, so we will also have a webcam set up for investors to track progress in real time, as well as getting quarterly construction updates from the project manager. Just a few pictures here of what the internals will look like come completion. Now, for those of you that haven't visited Berlin, this is a map of the city. It's incredibly large in terms of its landmass for a capital city. Another anecdote, you've got 3.8 million people living here. After Brexit, Berlin is actually now the most populous city in the European Union. And our project is incredibly central. So we're located right there. And this district is Friedrichshain. So this being the geographical center of Berlin, where you see that there. Now, in terms of the micro location, we're 5 minutes walk away from the S-Bahn and U-Bahn. So you've got access to the underground and overground train stations, all in time to the center. Alexanderplatz is 16 minutes, 23 minutes to your Hauptbahnhof, that's the central station of Berlin. You've got a location called Europa City around that area, where a lot of consulting companies have their headquarters. Firms, typically speaking, in that field with 1,000 to 2,000 employees. You've also got Total that have 1,000 employees based out of there. So a potential other employment nodes that you could get prospective renters from. 26 minutes to the Brandenburg Gate. Right next to that, you have the German Parliament. And just for reference, this is more a tourist hotspot, but Checkpoint Charlie, the famous checkpoint between East and West Berlin, is 29 minutes away. Now, for anyone that's, if we have any Germans on the call, or if anyone that's looking at this and does have Germans or people living in Berlin, the big selling point of this development was Boxhagener Platz. Now, Boxhagener Platz is this square here, and it has a very famous Sunday market, but all along the streets here are made up of international restaurants offering different types of cuisines. You've got a lot of cafes, brunch venues. It is one of the most popular areas, I would say the most popular area in Berlin for restaurants. It's definitely got the best markets on Fridays, Saturdays, and Sundays. They do food markets, all sorts happens around that location. So we're at 10-15 minutes walk from the center of Boxhagener Platz, but we're still located in that neighborhood. The Mediaspree is also 10-15 minutes walk away from our site, or probably about 5-6 minutes by bike. That is everything along the River Spree there. So there you have the old Berlin Wall, a little piece of history. And it's also where, after reunification of Berlin, the government invested a huge amount of money in rejuvenating areas in the east, especially around the area where you had the wall. So this is a tourist hotspot, absolutely, but also a lot of media companies are based along there, hence the name. So MTV, Universal, Coca-Cola, Viva, just some of the companies that are based along this stretch. Again, once we have completion, we will be speaking to some of these companies to arrange corporate lets, since they bring a lot of employees in from overseas and have a lot of trouble finding them apartments. In fact, some of the people that we had renting developments on the other side of Berlin last year were from some of these companies, and they have very attractive relocation packages in terms of what rents they can pay. However, the vast majority have been for months living in hotels. That is just how difficult it is to find a property at the moment in Berlin. Amazon. So Amazon rented 29 floors in a development that is completing in the next couple of months. They've got capacity for 3,400 employees there. It's going to be their HQ for Germany. This is maximum 15 minutes bike ride away, 30 minutes walk from our site. Again, another company we will absolutely be speaking to with regards to corporate lets. In our past events, we just let out. We had a number of people that Amazon are bringing in now, and they were looking to rent on the other side of Berlin. So this location is far more attractive, given where the office is based. Zalando, they are one of the most successful startup stories in recent times in Germany. They're an e-commerce fashion retailer If you've heard of ASOS, Zalando is similar to that. ASOS are based primarily in the UK. Zalando for Europe, largest company by market cap, and they have a new build development here. So another company we'll be speaking to close to completion. The Mercedes-Benz Arena, again, is located in this district. So this is where all the big events in Berlin will be taking place, whether it's concerts, football events, esports, gaming industry is becoming very, very popular around globally. The industry is thriving, but especially so in Berlin. So there's a lot of events from that side that take place in the Mercedes-Benz Arena. So that pretty much wraps it up from the micro location itself. Just to put a few pictures to some of these places I've been talking about. On the right here, that's Amazon's headquarters. That it looks exactly like that. The facade is finished, although this is a CGI. So Amazon are renting 29 out of the 35 floors, with the capacity being 3,400 employees. Top left, Mercedes-Benz Arena. You've got the iconic red Coca-Cola building along the Berlin Wall and River Spree. And the bottom left is Zalando's new building that's just been completed. In terms of the acquisition process, I thought it might be useful to go through what a typical unit might look like. So under for a 400,000 euro unit, you'd require around 192,000 euro in equity, provided you're taking a 6% loan to value mortgage. We request a $5,000 or euro reservation fee, provided you would like to reserve a unit. That is refunded back to you, so that's not a cost for purchasing the unit, but it's just for you to hold any apartment that you wish on the list. In terms of the acquisition costs, the process lasts around 6 weeks from reservation if you've decided on a specific unit. That comes to around 32,000 euro. So 8% acquisition costs all in. That might seem slightly high, but do bear in mind when it comes selling the property, there are zero costs on disposal. In terms of the payment system in Germany, it works according to milestones. So there's 7 milestones. Germany is a very, very consumer protective country, and they only permit developers to charge any money to clients, provided they've completed that portion of the development. The government has come up with a system and said this is the portion they need to complete, and then they're allowed to request this much from clients. So it's a very, very standardized system. As I said, we've started building now, and the first milestone will be completed in mid-February. So that's when the 25% would be due. That would come from buyer's own equity, with the mortgage covering the remainder, so to speak. The second milestone, 28%, so you would need 10% additional equity at that point in time, will fall due in October. After that, the mortgage covers any and all milestones up until completion, and then that's that final 5%. So all in all, this comes to around 192,000 euro for these 4 sections here. That wraps it up from me. I'm happy to take any questions if people have any.
Great. Well, thank you very much, Ian, for presenting tonight. Again, it just reinforces what I think is an extremely compelling opportunity to expand somebody's portfolio into a city that I found here in Asia is perhaps less well known compared with other countries such as the UK and Australia. But as we can see, many compelling reasons why to consider and potentially invest into Berlin. What I'd like to encourage is there is a chat box. It should be towards your bottom right. And if you'd like to put questions in there, would be delighted to answer those questions as they come in. Maybe what I can do, Ian, is just to get the ball rolling. Mm-hmm. Having been involved with Berlin real estate, I think for about 6, 7, 8 years now, it really has been quite incredible, both the capital and the rental growth. And you've also shown extremely strong figures for 2022, 23. How sustainable do you think that is based on, where the market is today?
Yes, that's a good question. In terms of the interest rates, as I mentioned before, those have come up slightly. Those affect property markets generally. But as you saw from that graph I presented, tier 1 cities have continued to see prices go up. So what we're seeing now is a more reasonable picture in the market. So places that have low vacancy rates, have very low supply levels, but incredibly high demand. And a lot of people are moving to tier one cities, particularly Berlin, because it's a fantastic place to live. Cost of living is a fraction compared to somewhere like London or Paris. So that's what's driving a lot of the growth. And there just aren't any apartments available. So that's what is the reason prices are going up. That's why rents continue to go through the roof. What we're going to see now as well, which is quite interesting, is we are one of the largest developers, so we're still able to operate efficiently. We don't actually use construction finance. We're fully equity finance from our balance sheets. So we don't have that much issue building with the interest rates going up somewhat. However, smaller and medium-sized developers are more affected. So they're not able to build any more profitably. Construction costs are still quite high for developers. So what we're seeing now is planning permits have fallen dramatically. They've fallen about 50%. And this is a market that's already undersupplied. And in the next couple of years, we're going to see that vacancy rate drop even further. And that's what's going to be driving the growth. That's what's going to be driving the both on the capital growth side and also on the rental growth side. So really, it is a very steady, strong, sustainable market. And that's why we expect the market. I mean, I bought myself a number of properties in Berlin, and I see the market growing, certainly on the rental side, at least 5% per annum. Actually, in our rental contracts, we fix in 4% rental growth. So people will be paying that automatically, that additional amount automatically every year. From a capital growth perspective, anywhere between 5 and 10% per annum for the next 10 years seems still very, very realistic, just given this chronic undersupply.
Great. Okay. So again, very compelling figures there. Again, please do put questions into the chat box. Tap into Ian's wealth of knowledge here. Is a real opportunity. So I've got a few other questions some clients had asked me previously as well. So when it comes to financing, which is an integral part of real estate investment, what sort of success rate have you had getting mortgages for clients through the brokers that you use, Ian?
So provided, so we work with a mortgage broker, Balfi Nord, and they don't charge any brokerage fees, which is quite unique. Certainly they would charge it in the UK. But we have pretty much 100% success rating, provided somebody earns a salary, a decent salary. So we're talking at least about €4,000, I guess, per month. I mean, it could be lower than that, but typically speaking, most of our buyers will earn that or more. And you're not in a watch list country, so which most countries around the world are not. And so provided you have a salary and you are not on a watch list country, we have a 100% success ratio. The reason behind that is that the pension fund we work with is lending on the property itself. So before we launch any project, we'll provide all the information in terms of prices, floor plans, a bill specification. They also are familiar with Brinker as a developer. That helps a lot. Then they will tell us, okay, we're happy to lend this amount. So they're not actually lending based on the buyer's criteria, not so much. They do need some basic information from them. They're more lending on the development itself. So that's why we have such a high success ratio. And yeah, provided you have job and income, rather earning at least €4,000 per annum, and you're not living in any of the watch list countries, then there's absolutely no problem getting a mortgage.
And I think that's very reassuring because, again, one of the challenges in the UK is if you're buying off plan, you can't guarantee getting a mortgage until typically 3 to 6 months from completion. Mm-hmm. So you're signing a sales and purchase agreement maybe 1 or 2 years in advance. And although you may get an approval in principle, it's still not a mortgage offer. Whereas in Germany, what you were saying earlier is that you can actually get potentially, if you move quickly enough, a mortgage offer before signing your sales and purchase agreement. And what you're saying is you pretty much have 100% success rate getting a mortgage. So that whole sort of stress level of buying off-plan property is completely different from, let's say, the UK market.
Yeah, I mean, absolutely. You could sign a mortgage, actually not even an offer. You can sign a mortgage before you sign the purchase contract if you want to. Provided you're quick on responding, the documents they require are incredibly basic. You could get a mortgage through in 2 weeks. provided you submit the documents in a timely manner. Everything's correct, and it is a very, very basic application. It's not like dealing with banks that have a huge amount of different AML involved. You can get a mortgage through in about 2 weeks' time, and you can do that before you sign the purchase contract. So if you're worried at all about whether you'd qualify for a mortgage, that's the process you take.
Okay, great stuff. We've got a few questions coming in now. So Richard's asked, that's not me, another Richard. Please share on rent control. If a tenant signs a lease, will it be a fixed term? Can we increase the rent, say, after 2 years?
So there is rent control in Germany as a whole. However, it's not applicable to any buildings built after 2015. I believe it's October 2015. Anything that's been tenanted or built after October 2015 has no rent control. So you can charge whatever the market deems necessary. So that's why there's a big divide. And how you look at property in Germany is there's two markets, one that's built prior to 2015, where the yields you're getting will be very, very poor. The tenants have a lot of rights. You won't be able to evict them very easily. It's just very difficult, and it doesn't make sense from a investment point of view to invest in those sorts of properties. Now, for new builds, as I said, there's no controls. What we do with the developments that we have and that our sister company manages is we have 2-year contracts in place. The tenants have to stay a minimum of 1 year, and we have 4% rental increases. So what's very, very important with contracts is that you fix in how much you will increase the rent per year. So it's sort of a quirk of the legal system in Germany. We do 4% because that's a reasonable figure that we found we're able to get from tenants. So the contract itself is for 2 years. The tenants can stay longer, but this 4% rental increase will be fixed in. Now, you can't renegotiate that, but that's on both sides. So the tenant can't renegotiate that, and the buyer can't decide, okay, I want to increase it by 10%. But after that 2-year period expires, you do have an opportunity to bring that up. But again, most people are quite happy with the 4% rental increases, and there really aren't as many controls as on old buildings.
Great, thanks there. Madeline's asking, prices start from 400,000 euros. I think you mentioned that's
the average price.
Average price.
Yeah, exactly. So I think we've still got units around 320,000. So it starts from about 320. Yeah, that's the starting price. So around 400 to 450 will be average prices of the unit.
Yeah, and if you took, let's say, central London, you'd really be looking at close to probably double that kind of figure.
Yeah, absolutely.
For a like-to-like kind of location. So again, maybe could you share why Berlin, the capital city of the strongest economy in Europe, what's the background and history that has really meant that Berlin real estate prices are so much lower than other tier 1 cities in Europe?
Yeah, I mean, it's been quite a disjointed city with reunification. So you previously had East and West Berlin. When those came together, you had very, very different industries in the East. So the East was more manufacturing based, and then the West was a little bit more service based back then. Now, it's certainly not the case, but it took some time to reunify the city, just from cultural perspective, from an economics perspective, from a just a general people perspective. So this meant that the economy took a little bit more time to really find its niche. In 2005, interestingly enough, Berlin had an unemployment rate of 19%. So 1 out of every 5 people were unemployed. This wasn't due to any sort of crisis or recession. This was just because it took some time to unify the economy and find a focus. Now, today, that figure stands at around 7%. Now, it's a little bit higher than elsewhere in Germany. But if you're looking at these central locations, you've got a huge number of tech firms that are coming in. They're paying very, very high salaries. The people that want to live in this location have very high disposable incomes. That's why we're able to get such good rents. And yeah, if you're an international person that has moved to Berlin, I would say between the ages of 20 and late 30s, this is the district where everybody wants to live. So it's just about them finding an apartment But yeah, it's because it just took the economy itself with Berlin was quite disjointed, and it took a while to find its center. It's now done that in the digital and tech sector quite successfully. You've got a huge number of startups coming out of Berlin. A lot of venture capital companies have moved into the city as well, that are providing more funding for these companies. So yeah, that's really the background.
Great. I know when I share with clients buying off plan, two of the risks or perceived risks of buying off plan in the UK, which is where I'm certainly more familiar with, mortgage risk, which I've already touched on, is one, but developer risk is the other. It's probably the worst case scenario where a developer defaults.
Yeah, absolutely.
Everybody loses out. You've kind of touched on certain building milestones and what appears to be very strict rules and regulations for developers to adhere to, but even protections so that if a developer were in the very unlikely scenario to default, there are still remedies in place to protect the investor. Maybe you could just walk us through that, even though, again, I'm sure Ten-Brinker has never defaulted and it's been in business over 120 years. But, just to reassure the clients and audience tonight, just in case they have bought off plan in the past and maybe they've had a negative experience and it's put them off buying off plan property.
Yeah, so first of all, to start off with, I highly recommend if you're buying with any developer, absolutely do your due diligence. Even with Ten-Brinker, search online, you'll see that they have a stellar reputation in the market. As I said before, we're building a lot of institutional investors. Aberdeen Asset Management is a big client of ours, Quantum, Deutsche Wohnen, these very, very large institutions in Germany trust us to build because we have such a strong track record. We are also a very conservative developer. We're family owned, which is also quite unique. So the Ten-Brinker family, it's in the family, I think it's three generations now. So they have an incredibly good reputation. So it's very good, important to do your due diligence on that side. That being said, when you're buying in Germany, there's such a myriad of different protections for the buyers. The most important being the milestone system. So you're never paying any money unless you get building and works in return for that. What that ensures is that if a developer were to go bankrupt, it's up to the bankruptcy courts to find another developer to pick up where the last one left off, so to speak. So you won't have lost any money. There might be delays, absolutely. That's conceivable. But the worst case scenario is that you're having delays in the development. You're not paying any additional funds because you'll only have paid for what has already been constructed. So in that sense, you're very, very protected. Another thing just to mention on Ten-Brinker is they're the only developer I've come across globally that don't use SPVs. So SPVs, for those of you who don't know, are special purpose vehicles. And typically speaking, when developers build, they'll buy a plot of land and put it under a different company, so not the parent company. They do that so that worst case scenario, if anything goes wrong with the project, they can disavow it, and the most that they lose is the value of the plot. Ten-Brinker don't do that. You're always transacting with Ten-Brinker project development, and these guys are building hundreds of millions of euros of projects per year. So that gives an additional layer of comfort for buyers buying. But yeah, the primary protection in Germany for buyers is this milestone system.
Great. Okay, thanks for sharing. Again, please do put some questions in. I've got perhaps one more, and you probably kind of answered it. Obviously, with the exceptionally low vacancy rates of at the moment 0.8%, which I don't know of any other tier one city in the world that has such a low vacancy rate. I mean, how long would it typically take to rent out a unit once you put it on the market?
So bear in mind that we've got, let's take this project or a last one. We have about 70 units on average coming to market one time. Obviously, they're not all going to go in the first week, but 2 weeks is typically speaking what we see. The longest it takes to rent out 2 weeks, that's not because there's not demand for it. That's just because it takes, we do a lot of viewings. We only have so many people to show the apartments and get the admin across the line in terms of signing a contract, which has to be done in person. Rental contracts, rather old school system in Germany. But yeah, 2 weeks from project completion is how long it takes to rent out all apartments in a project.
Great. Okay. All right. Lovely. I don't see any other questions coming through. Ian, is there any other sort of final passing comments that you'd like to make?
No, I think I wrapped up most of it. I mean, Berlin is an incredibly strong market. Germany as a whole, and specifically tier 1 cities, you have very attractive financing, certainly compared to pretty much everywhere else in the world right now. When you're buying for a 3.98% interest rate, that's fixed for 10 years. So Germany is a very boring, very strong, very stable market, and that's what I believe as a property investor you want to be investing in. You don't want to be buying somewhere that goes up, let's say 20% one year and then crashes 50% the next. Germany provides that stability. So it really is, typically speaking, a 10-year hold due to the numerous tax advantages you get behind holding that for 10 years. The undersupply and the interest rate all make it quite an attractive proposition. And yes, that's why we're continuing to build quite a substantial amount of developments in Berlin. We're still getting a lot of demand for institutional investors. We're building a lot for government-backed asset management companies. So yeah, in a nutshell, Berlin is the city that we believe in also the most, as opposed to anywhere else in Germany or any of the other countries that we operate in, for that matter.
Great. Okay. Well, thanks for that sort of summary and wrap up. Again, thank you, all of you, for joining us tonight. I hope this has sort of been very illuminating, especially if you're not so familiar with the Berlin property market. And again, I think Ian has really shared an extremely compelling argument to consider and invest into the Berlin property market. What I'd like to encourage is for anybody that would like to take this further, please don't hesitate to give me a call or email. What I'll do is I'm going to leave the chat box open and the call open for a little while. So if there's anybody that would like to just put their email addresses into the chat box, if they'd like us to send information on the investment opportunity, we've got a great brochure that really walks you through the investment case again to really reinforce what we've got tonight. So thank you very much for attending, and we'll look forward to hearing from you in the near future. And as I say, I'll keep the chat box open, so do put your email address in there if you'd like us to send some specific information on the development. And again, thank you for Ian for making time. It's always a pleasure, and always great to hear again your depth of knowledge of the Berlin property market. So thank you.
Thanks, Richard.
Thank you, and good night.
Thanks, Ian.
Take care.
Hi, if you're still there. Yeah, there you go. Yeah, we got your. Okay. Sure. And I believe the participant on the call, M, is asking for the full address. So please, M, if you could provide the email address where we can reach out to you, please do so we can send it over to.
Hi, I have a question. Just want to check for mortgages in Germany, what is the minimum amount the buyer needs to put in from his own money? And, or in other words, another way of asking is, how many percent of the property price is the bank willing to loan?
So Ian basically on a conservative side said that you can get mortgages of 60%, so that would mean a 40% deposit, but he said that's on the conservative side. It may be able to get up to 65. I know we have even gone up to 70%. Sometimes that depends on several factors, the price of the property and also the size of the property. You tend to find that the bigger and more expensive units, the loan to value that you can get is a bit higher. So that might move closer to 65 to 70%. But to be on the safe side, especially for the smaller units, what's referred to as the Manhattans, which is a trendy name for a studio, it's probably best to budget around about 60% loan to value, so a 40% deposit.
Okay, and do the banks usually require to see the salary of the buyer, or they don't need to see minimum salary or earnings by the buyer?
I mean, from my experience, and what Ian mentioned was the income required. The threshold is very low. It used to be about 30,000 euros per annum, which is pretty low. And if, let's say, you're a retiree, or let's say you were a business owner and you don't really pay yourself such an income, they will look at other forms of income. So if you have other properties and so on. But again, in my experience, and I've done a lot of properties in Berlin over the years, to date, I've never yet had one client that's got rejected from a mortgage application. We have 100% record. The only thing that has caused issues, if you live or reside in a country that's on a watch list or a blacklist, that's the thing, and that's very uncommon, we find.
All right, yeah, that's all I have. Thanks.
And again, if very often it's worthwhile that if you're interested in the market, what we can do is put you in touch with the mortgage broker. They can go through an assessment and they'll let you know whether you can qualify for a mortgage, and that can be done over within a few days, to be honest. So if you would like to go through that process, they typically will require you to fill out a fact find form, and then within a few days you can get an indication of whether you'd qualify for a mortgage.
Okay. Thanks. Okay, bye.
No problem. Thanks, Edwin. I'll stay online in case there are any other last-minute questions from people, or if you haven't already, put your email address into the chat box. If you want more information, please do so, and we'll send some more information. Jess, is there anything else that you need from anybody on? I think it's only us left now, actually.
Yeah, no, actually, we already received the email from M.
Okay.
And